So I see everything right now is a deal, right? What is going on, guys? I hope you're having a fantastic day. I want to start off by apologizing for how inactive I have been over the past week. I haven't posted, I haven't done anything, but with good reason, because I have been moving. As you can see, I have a nice plain wall behind me. So if my uploads are a little unsteady for the next week or so, that is why. So before we get started, just a reminder, we are doing a giveaway once we get to 250 subscribers for an Amazon gift card. So if you haven't already subbed, or go ahead and drop a like. If you feel like I earn it at the end of this video, please do so, and let's get into the news. So we are 1 week away from Election Day, and more than likely we are not gonna know next Tuesday night, that is, who the next president is gonna be. This looks like it's going to be something that drags out over the next few days after the election, which is going to mean a few things for this stock market. Typically, this is probably going to mean a lot of uncertainty, and the markets do not like uncertainty. As you can see now, really yesterday, today, the major indexes are not doing well. Stocks are not performing well because investors are realizing, hey, there are a ton of unknowns. We don't know when we're going to be getting stimulus. Pretty much, I mean, we've essentially established we're not going to be getting stimulus probably before the election. So that's another week where we have a lot of question marks about the economy, about COVID cases going up and stuff like that. And really, when you think about stimulus, think about it this way, and this is how investors are also thinking about it. It's not like, hey, they pass something and stimulus is flowing into the economy immediately. They pass a bill or they pass a large stimulus amount or bailout amount. That money takes weeks, if not months, to actually start flowing in through the economy. So really, every day that goes by is more and more damage that is being dealt to the economy. Obviously, both parties kind of have their different approaches or different views to stimulus, but both sides can agree that we do need some sort of funding, additional help for small businesses, additional help for people on unemployment and stuff like that, and maybe even a round of checks that was sent back out a couple months ago to the same people. So that is really the main driver for all this uncertainty, along with the election, along with not having probably results on election night. So my recommendation and what I'm doing is kind of what I've been preaching this whole time. I have two separate accounts. I have a retirement account and I have a brokerage account. And what I'm doing in both of these is different. In my retirement account, I know that's money that I'm not gonna ever touch until basically I'm 59, 60 years old. So I see everything right now is a deal, right? Because if we know anything from history, we shouldn't be greedy as far as percentage points in retirement accounts and money that we know we can't touch for 20, 30, 40 years. It's always going to be higher than it is now. So in our retirement accounts, let's not get greedy. Let's go ahead and start buying up companies that we like, quality companies that we think are going to be around for a long time. They are, they might still be at record highs, they might just barely be off record highs, or even if they come down another 5 to 10%, do not let that deter you from buying into those companies now, because 20, 30, 40 years from now, they're gonna be much, much higher. And if you sit there always trying to cherry pick the deal with your retirement accounts in particular, you are going to miss out on a lot. So that is one approach that you should have for retirement accounts in particular. Continue to buy the bottom, just buy it all the way down, pretty much buy all the time and pretend that your sell button is broken. Now, my other account, and I'm kind of treating this a little bit differently because the approach for accounts that you have immediate liquidity to, like a brokerage account or just your general trading account or anything like that, I am holding cash. I'm, starting to pile up more and more cash because I really think that the market has a bit more downward momentum to go. You have really seen uncertainty, volatility, all this stuff is increasing leading into the election. So in this particular account, I'm going to sit there and try to cherry pick the bottom and let it fall another 5, maybe 10%. And then depending on how markets react to basically who is elected president, when we actually know this news, when we get news of stimulus, this is when I'm going to say, okay, this is probably where we have found a bottom. That is when I'm going to buy in to some particular names that I like. I'm really focusing on Visa and PayPal. These are companies that I think have done extremely well during the coronavirus. They're companies who have a really good track record over the past 10 years as everything pushes to digital. So these are two companies that I'm watching. Really, you can't do business anymore online without the partnership of one of these companies. Every transaction you do, it's not like you can pay cash on Amazon. You have to pay with credit card, PayPal, or some form of like e-currency basically. And one of those companies I currently own today, and that's Visa. So I'm watching to hopefully pick up more Visa. And then PayPal is a company that does pretty much the same thing as Visa, but I'm hoping to get in on them if they continue to fall a little bit farther. Obviously, if you can pick tech up at any point in time off their high, I would recommend doing so. Another sector that I'm really watching in particular that I think, at least in the next couple of months, really has a little bit more room to fall before we get a nice rally, I think. And, that's the airline sector. So, they had a nice rally last week. They have pulled back considerably. I'm still targeting Southwest is the main airline that I'm looking to invest in, because domestic travel is going to be the one area of travel that returns first. Obviously, a lot of unknowns around the world. So I think people are going to first and foremost be willing to travel within the domestic area. Southwest also came out and announced that they are going to begin selling the middle seat, which is massive. I really don't know why airlines for a period of time said that they are not going to be selling the middle seat. To me, that is crazy. I mean, there's nothing, it's all a PR stunt, right? If you think about it, because if you really think you're going to be saving and not spreading coronavirus or whatever just by not selling the middle seat, that's crazy. People who are flying are willing to accept the risks of catching coronavirus. So I go for make the money, have less flights, pack the flights more full, make people wear masks, have precautions and all that sort of stuff. But I mean, that is one thing that I like to see. So that is why I'm targeting Southwest. I do think after the election, airlines are going to get some more stimulus money because, once stimulus is really being, politicized right now. So once the election happens, once we find out who wins the presidency, do Republicans hold or lose the Senate? What happens in the House? So these are all things that are going to go into stimulus conversations before we get to the end of the year. And I think airlines are going to be the first on the list for stimulus money. So that is just my strategy. You guys definitely do what you feel comfortable with in your money, but I think it is important to understand the different accounts that we might hold and really our target and our goals with this. Investment accounts should be treated differently than retirement accounts because of, essentially when you plan to use them. And, one you should really incur a lot more risk with, and then others you should not. So that is just my 2 cents. Do your research. Certainly don't necessarily invest in any of the companies that I said unless you feel comfortable or you believe in them, at least for the amount of time that you want to hold the stock. So guys, I hope you learned something. If you feel like I earned a like, please feel free to smash the like button. Subscribe if you haven't already. And before I let you go, I got to give you the fun fact of the day. And that is today in history, 1904, New York City subway opened. So pretty crazy. Definitely public transit is a major thing. And it's going to be interesting to see how public transportation, as we, jump forward, 20, 30, 40, 50 years into the future, what is transportation going to look like? We're probably going to have a lot of electric vehicles. Who knows? Maybe we have some flying stuff, high-speed rails. I would love to see high-speed rails be a thing in the United States. I think it would be a really good alternative to flying. And in a lot of instances, nobody's going to hop on a flight and go from, like a 4-hour drive. Nobody's going to hop on a plane and do that. But if you had a high-speed train option that maybe where it took, 1.5 hours to cover that distance, I could see a lot more people taking a high-speed rail than, being willing to hop on a plane, whatever, anything like that. So guys, let me know what you think in the comments below. What companies are you targeting right now? Do you think that we are headed for a recession? If so, how big of a dip do you see on the horizon? And without further ado, I will see you guys tomorrow.